Welcome to this explainer. Today we're tackling something absolutely crucial for your ACCA Business and Technology exam, mastering professional ethics. I'm super excited to guide you through this because honestly, these concepts aren't just for passing a test. They're the literal foundation of your entire future career.
So, let's kick things off with a quick question. What really separates an accountant from, say, any other standard employee? Is it just being great at math? Definitely not. It's the fact that being an accountant comes with a much higher standard of public responsibility. Think about it. People are relying on your honesty to make massive, life-changing financial decisions.
Okay, let's dive into this. Here's our quick roadmap for today. We're going to cover the foundations of business ethics, the IFAC ethical principles, ethical threats and dilemmas, safeguards and corporate values, the difference between a profession and an occupation, and finally, wrap it all up with a quick exam revision summary.
All right, starting right off with Section 1, the foundations of business ethics.
So what actually are professional ethics? Well, they're the moral principles and standards that guide how you behave in the workplace. And here's the key takeaway. It's not just about barely staying out of jail or following the letter of the law. It's about doing what's morally right. For instance, being totally transparent about a financial error you made, even if literally no one is watching.
And because of this, ethics is actually a huge driver for long-term business success, not just some compliance burden. Ethical behavior builds massive trust. When an organization promotes fair decision-making, like say paying suppliers on time or treating employees fairly, it naturally ensures legal compliance, protects stakeholder interests, and builds a stellar reputation.
Moving right along to Section 2, the IFAC ethical principles. Now, the International Federation of Accountants, or IFAC, demands 5 fundamental qualities from us. First up is integrity. That means being deeply, fundamentally honest, like flat-out refusing to sign off on a dodgy expense report. Second is objectivity, which means avoiding bias. So you shouldn't be auditing a company owned by your brother, right? Third, professional competence and due care. You've got to stay updated on new tax laws. Fourth is confidentiality. Never ever share a client's upcoming merger details at a dinner party. And fifth, professional behavior. Basically, comply with the law so you never bring discredit to the profession.
Now, what's really interesting is how these principles get tested in the real world, which brings us to Section 3, ethical threats and dilemmas.
Imagine this classic exam scenario. Your boss asks you to alter an invoice date to move revenue to an earlier period, just so they can hit a target and secure a bonus. What do? This is a textbook ethical dilemma. It's a situation where your personal values, or maybe just intense workplace pressure, conflict directly with your professional responsibilities. In this case, it's a direct threat to your integrity. To navigate these, you really need to recognize the 5 main threats. There's the self-interest threat, like manipulating profits to get your own bonus. Then the self-review threat, where you lose impartiality by auditing your own previous work. Advocacy threat is when you act like a cheerleader for a client, maybe promoting their shares. The familiarity threat happens when you become too sympathetic, maybe because a client is a close personal friend. And finally, the intimidation threat, basically being bullied by a dominant boss into hiding a loss.
So how do we protect against these villains? Let's look at Section 4, safeguards and corporate values.
We fight off these threats using safeguards. These are things like strict professional standards, independent reviews, and robust internal controls. And right at the core of all this is a strong corporate code of ethics. This code guides decision-making and really shapes the whole corporate culture. When it's driven by ethical leadership and solid staff training, everyone knows exactly how to blow the whistle on bad behavior. That keeps risks low and, more importantly, keeps stakeholder trust incredibly high.
This brings us back to our opening question in Section 5, the difference between a profession and an occupation.
Look, an occupation is basically any work that provides an income, usually governed by just general workplace rules. But a profession, like accounting, it's in a totally different league. It requires specialized formal training, it's strictly governed by professional bodies, and it's bound by a rigorous, strict code of ethics. But the absolute biggest difference? A profession requires a massive focus on serving the public interest, not just earning a paycheck.
And that brilliantly illustrates our final takeaway as we head into Section 6, the final exam revision summary.
I highly recommend taking a mental screenshot of this cheat sheet right now for your exam. Okay, quick recap. Ethics equals moral principles guiding behavior. The 5 IFAC principles: integrity, objectivity, competence, confidentiality, and behavior. Watch out for the 5 threats: self-interest, self-review, advocacy, familiarity, and intimidation. Protect yourself with safeguards like policies, training, and internal controls. And always remember, a profession requires specialized qualifications and serves the public interest. So, armed with all this knowledge, here's my final provocative question for you. When you inevitably face your very first real-world ethical dilemma, will you have the courage to stand by these principles? Good luck with your studies, and thanks for joining this explainer.